In this video, I'm going to be talking about why Berkshire Hathaway is poised for potentially 5x growth by 2030 by taking a look at some unique challenges that are coming down in 2025, 2026 that is going to affect most of the stock market. But actually, Berkshire Hathaway and Warren Buffett are well positioned to take advantage of those very rare opportunities. So I'll cover all of that, plus company financials, macroeconomic developments, and landscape, and finally give a prediction and estimation for Berkshire Hathaway in this video. So stick around to watch all of that. Now, when we take a look at Berkshire Hathaway versus the S&P 500, at the moment, it mirrors it very closely. And you can see it basically is edging above the S&P 500. But when we talk about the key macro variables in just a moment, you'll see why Berkshire is well positioned to not only decrease risk, but also take advantage of tremendous upside. And that has to do with the fact that Berkshire is an individual conglomerate and not the S&P 500. So within the S&P 500, there can be some bad stocks that really weigh down the index of the stock market versus some of those great stocks or conglomerates like Berkshire that have a lot of pricing power in the form of if there's inflation coming in, so they can raise prices and consumers will pay those prices because their goods are more inelastic. So people will be willing to buy essentials rather than discretionary or luxury items like iPhones, etc. So Berkshire, I'm going to be talking about this in just a moment, why it is basically the perfect conglomerate to take into account some of those macroeconomic headwinds that we're going to be facing. So let's take a look at the key macro variables. Money supply growth is down 2.29% on a year over year basis. That's important to understand because money supply is what drives inflation. And core inflation is up 3.8% on a year over year basis. Now, this number for inflation is higher than desired, but when you take into account the negative money supply growth, when you look at that relationship between money supply and the downwind effects on inflation, this is good for keeping inflationary pressure and inflation down in the short term, but that is not going to be the case in the long term. Now, continued unemployment claims, which measures rising unemployment level, is up 32% from the economic cycle floor in June of 2022. This number is very high, and at these levels, a recession has historically occurred within 1 year due to a weak economy that is prone to shocks. Now, there's a lot of different shocks that are potentially out there, both geopolitical, even from the other day. If there was a solar storm that were to knock down different electrical features and cause impacts to the economy, that also can take a weakened economy over into a recession. Now, currently, we are in year 2 of the market's discount cycle. And what this means is that every 3 to 4 years, the stock market performs poorly due to an alignment of monetary and fiscal policy with the political cycle to address key economic issues. Now, even though, just like I mentioned, there is a possibility for a recession in the near future within the next 12 months, the discount cycle says that it is unlikely that restrictive monetary policy and fiscal policy will be deployed, which would negatively impact the stock market or companies like Berkshire Hathaway. Now, before I dive into how this will affect Berkshire, let's look at the big picture. The stock market can be categorized as falling under a good year this year because we are in year 2 of the market discount cycle. Now, it's important to understand the market discount cycle. If you were to follow the strategy on the previous table, which involves categorizing and investing around the predicted direction of the stock market, you would be $1 million better off in this 15-year example growth of $100,000. Now, before we wrap this all up in a nice bow, we also need to understand why Berkshire's positioned for 5x growth by looking at major cycles. Now, major world-changing and domestic and international conflicts follow a cycle that begins approximately every 84 and 248 years. The theory around that is that astrological alignments cause predictable patterns of human behavior in the same way that tides are impacted by the moon. So right now, we are at year 83 and 248 on the major cycle, which means we are about to enter a period of major conflict. So that's very important to understand why Berkshire is actually very well positioned. So is the Oracle of Omaha. So it's also important to know about the major cycles because they can bring about wildcard events that can impact the stock market, but also present some absolutely incredible opportunities for the astute investor. Next, let's take a look at solar cycles. So it's important to understand this because there looks to be a little bit of a relationship between the apex or the peak of the solar cycle and when recessions tend to occur, as you can see by the graph right here. So these recessions tend to occur just after the peak. And in general, the peak of a solar cycle usually occurs 4 years and 3 months after the start of a new cycle. So that's the average. Sometimes it can occur up to 6 years, and sometimes it could be as quick as about 3.5 years after the start of a new solar cycle. At the time of this recording, which is May 2024, we are right smack dab on the dot of 4 years and about 4 months after the start of a new solar cycle, which started at the very end of 2019. So like December 26, 2019 was the approximate date of the new solar cycle. So this is very interesting, again, because of that relationship, and it kind of coincides with some other key variables as well. But that just goes to show that there is a lot of negative forces that might be crescendoing between the market discount cycle, the major cycles, and the solar cycle in terms of a recession coming down the road and negative headwinds for the stock market as a whole, but not necessarily Berkshire Hathaway. So I'll talk about that in just a moment. Moving ahead to market P/E valuation, basically the stock market as a whole, not Berkshire Hathaway, is pretty overvalued by about 7 points, which means that it's poised for a bigger than normal drop during the market discount cycle. And monetary policy is currently favorable to the stock market, as interest rates should remain about the same or decrease should any shocks occur. Then rounding out the policy section, fiscal policy is also favorable as we continue to have strong government spending, and that spending would increase should a shock occur to the system. Now, before I give my prediction on Berkshire, if you want to get stock rankings to find the very best opportunities and also macro analysis and asset class rankings such as gold, crypto, etc., then make sure to go ahead and click the button down below. Now, let's dive right in. In terms of company financials, Berkshire is well positioned with a very healthy revenue amount, growing 20%. That's also outstanding, especially due to the size. If you were to compare Berkshire to Apple, which is overvalued, Apple's revenue growth is pretty flat and the stock continues to go up as well. So that is an overlooked opportunity. That's a big checkbox for Berkshire. The fact that the top line can grow and at such a rate well exceeding any kind of revenue growth that is attributed to pricing power or inflation. Also, net income and cash on hand, something that Warren Buffett is well known for, is very strong to take advantage of those key opportunities. Especially, you can trust the Oracle of Omaha to identify what is well priced and can stand the test of time. So that is all really good about the company financials. So the growth prospects out of that in the near future are tremendous. There's a lot of great growth, especially for a conglomerate of that size. So it's really a unicorn in terms of that as well. Now, before I round that all out, the macroeconomic environment right now in 2024 is conducive at the moment for stocks. So that's another checkbox for Berkshire. So in the short term, that is very good for Berkshire to continue to pace well with the S&P 500 or exceed it by a little bit. But the real big thing is what happens in the long term. So Berkshire Hathaway has tremendous leadership, and Warren Buffett is a company that has proven to grow and grow even at its massive conglomerate size. So basically, when these macroeconomic headwinds, both the major cycle, the market discount cycle, even the solar cycle, those all crescendo, which would take out negative or hard to replace like tech in terms of inflation and negative pressures. You can't really find upside reasoning for that in a negative environment. Berkshire stands to weather that well because it did during 2020 with those negative headwinds and then take advantage of that, have that pricing power to take off. And by the way, P to E ratio is only 9, which is well below what Berkshire has done historically and well below what the stock market as a whole is trading at right now. So there is a lot of upside, especially due to the fact historically on the major cycle, we are going through an inflationary period. So there's inflationary top line revenue growth that Berkshire has exceeded tremendously by about 17%. If you take 3% inflation, 20% year over year revenue growth, there's 17% of that revenue, of that growth. So about 90%, 85, 90%, which is purely just from the ability for the company to continue to expand what it's coming in from the goods and services. So I'm very, very bullish on Berkshire, especially as a long-term play. That's all for this video. Make sure to subscribe to the channel to view any daily videos, market updates, or market analysis that I do. And I'll see you guys on the next video.